Joining us this morning is BTIG Chief Market Strategist Michael O'Rourke to discuss what he's seeing in the markets right now. Mike, good to have you back on the program. And so we had a pretty good September. Is that going to continue into the fourth quarter? What do you think?
Thanks, Betty. I think the fourth quarter is setting up pretty nicely here. As you know, we had a good September, but we had a rough August. We had a good July, but we had a rough June, and we had a rough May. So, in essence, we really haven't made much headway over the past 4 or 5 months. But I think that positions us well for the fourth quarter to be a make-or-break environment for equities. And I think the economic data is going to pick up a little here and help equities higher.
Right. Well, because why? Because of economic data, or what?
I think it's going to be economic data. I also think the other key thing is with the volatility we've had in the market over the summer, a lot of people have stepped back from equities and de-risked, or they continue to favor bonds. And I think investors, both institutionally and on the retail level, are underweight equities.
Mike, it's John Erlichman. This seems like the toughest decision out there right now. Do I want to try and get into the market for fear of missing out on the rally that we saw in September? But what kind of stocks are people going to buy if there is that momentum? Are they going to keep buying the hot stock like Apple, or are they going to buy the stock like HP, which can't find any investor interest right now, and see it as, this undervalued play or whatever?
It all depends on the investor situation, but if it's a performance anxiety situation where they're lagging the indexes, they're going to have to take more risk and go out for the higher beta names. On the flip side, there's a lot of high quality blue chip companies out there trading at low double-digit, high single-digit multiples. That if you're an investor for the long term, there's bargains to be had out there if you think the economy is going to continue to recover. But
regardless of that, though, Mike, I mean, is this true that in September we had this nice rally in the markets, but there was still that continual, exodus of retail investors out of the stock markets, right?
Yeah, I mean, the stats are, there have only been 3 months of domestic equity inflows from mutual funds out of the past 14 months. And over the past 40 months, there's only been about 10 months of inflows. So retail has been selling equities not only for the past more than a year, but the past roughly 3 years almost, or over 3 years. And they're obviously all those flows have been going to bonds. People are much more defensively positioned.
Right.
Everyone's worried about the fears out there, and no one sees the opportunity of the good valuations and the economy recovering.
So then, Mike, when you're saying that you're seeing a better fourth quarter, is it that you're betting that that's going to turn around, or no?
Yeah, I think as you see economic data pick up and it looks like we're not double dipping and some of these fears about Europe continue to subside, people will see, okay, valuations are good. It's time that, the other flip side is you have a 2.5% 10-year Treasury yield that, the rate of flows into bonds have been unreal at this point. Okay. And, it's hard to see them sustaining themselves.
Okay. All right, Mike, we're going to have to leave it there, but good to talk with you and to see you again. Michael O'Rourke of BTIG from Philadelphia.